Hi, my name is Joe Lewis. Welcome to the Fixed Assets Functional Overview. This video is intended to provide high-level insight into the architecture of our product, Fixed Assets Management for SAP Business One, what we refer to as B1 FAM, but also provide a framework for evaluating any fixed asset software solution. So let's jump right in. We start with the asset. By our definition, an asset is anything that you need to keep track of, either financially, physically, or both. While a fixed asset is generally recorded on the balance sheet, this is not always the case, as you will see as we work through the presentation. Any fixed asset software solution must be able to track depreciation expenses, and most will do this with one or more than one set of books or areas. Many of you watching this may still be using a spreadsheet to calculate depreciation, or you're paying your accountant to do it for you. The issue then is not if depreciation is addressed, but how. Are the depreciation methods that you need handled? Everyone has straight line and some declining balance methods. What about all declining balance methods in percents, or units of production, modified straight line, or sum of the year's digits? And are all of the averaging conventions handled, including those required by the U.S. tax code for makers, which is mid-year and the mid-quarter? Is your corporate calendar handled? Most solutions are okay with January through December. Do you need a different calendar, 4-4-5, 13-4 week, or do you need or will you need a short year? And for the U.S., does it handle luxury automobile limits and makers? Are your rules enforced but still flexible? Can you easily make corrections when needed? As you will see when you review the video on depreciation setup and processing, B1 FAM handles just about everything, and in a simple but powerful way. During the life of an asset, there are many reasons why the cost basis may need to be adjusted. Handling changes, and changes do happen over the life of assets, is one of the most complicated and difficult aspects of fixed assets accounting. Your solution should make this as natural and flexible as possible. Most software solutions will handle making a change to costs, but can you also change anything related to the rules for depreciating a particular asset, like changing the method, the life, or the averaging convention? These capabilities are needed not only to correct mistakes, but also to conform to rules like the U.S. mid-quarter compliance requirement. When making changes, do you have the ability to reset depreciation expenses to the point in time where the change went into effect? Will depreciation be automatically adjusted? Is everything auditable? These are the questions you need to look into when looking at cost adjustments. Like depreciation, most software products handle some form of retirements or disposals. Most address what is known in the U.S. as an ordinary retirement. But in the U.S., we also need like-kind exchanges and involuntary conversions, which affect recognized and non-recognized gains and losses in different ways. Are these differences handled correctly? Are both full and partial retirements handled? If so, does the gain and loss calculate based on the then current state of the asset, or is depreciation adjusted exactly to the retirement date for complete accuracy in the gain and loss calculation? Acquiring assets and getting them booked can be pretty straightforward, or it can get complex. If every asset purchase was simply and properly recorded on an AP invoice, and that is all you needed, then most integrated solutions will handle the acquisition fairly well. But what if you need to make multiple assets from one line of an invoice, or make a single asset from multiple lines of an invoice? What happens if you want to include freight charges or implementation installation fees from a different vendor? Do you need to create assets from items in your inventory, either purchased or manufactured? Or if you lease or rent assets from a delivery to a customer in AR. We've seen all of these scenarios and more. We have a blog posted on our website that addresses the best practices for managing fixed asset acquisitions. You'll want to check that out, and also look for our video on acquisition management. It's a pretty powerful facility. These areas, plus transfers, which we will go over shortly, comprise the fixed assets accounting capabilities. The other side is what we refer to as fixed assets management, keeping up with where it is, who has it, etc. Let's get into that next. Proper fixed assets management requires that you know where an asset is for a variety of purposes. Some of those purposes affect accounting, like cost centers, projects, organizational units, whether or not they are embedded in the segments of your chart of accounts. You need to know specifically where to find the asset, its physical location. and you need to be able to define your location map to the level of granularity that you require. Many times you need to know who is responsible for the asset, the custodian, for assets like automobiles, PDAs, and laptops. You may also need to associate certain assets with other assets, referred to as componentization. Replaceable subcomponents, even multiple leasehold improvements to the same facility are all examples of good component management. The final major area of fixed assets accounting is transfers. All of these tracking fields need to be addressed with the asset transfer process. The key issues with transfers are: does depreciation get adjusted based on the transfer date or the then current state of the asset? If not, the depreciation expenses will not be accurate by organizational unit, your division, your department, etc. When the software solution does a transfer, does the asset stay intact or does another asset get created so that accounting can be handled? If new assets get created, what happens to the maintenance and other historic information? Does it get disconnected? Can you see the history of the movement of the asset over time and get to any and all of the accounting transactions that resulted from the asset transfer? These are the key questions that need to be addressed in this area. Is there a facility for taking physical inventory? Periodic physical inventories are good practices to reduce theft, keep up with undocumented transfers, and to generally inspect the quality of the asset itself. It is also a great time to take meter readings, which can in turn feed into units of production depreciation method and feed the scheduled maintenance capabilities. Properly managing the physical inventory process ensures that your insurance and property tax schedules are accurate. B1FAM is planning to develop a mobile application in 2011 that will enable this function to be performed with a BlackBerry, an iPhone, an iPad, or other mobile devices. Look for that in upcoming months. Do you need to prepare and/or verify property tax schedules? If so, what is the tax year? What is the millage rate for each tax municipality? Does the municipality assess taxes based on original cost, replacement cost, or net book value? The ability to properly and accurately track assets relative to tax jurisdictions can save you considerably in taxes owed and reduce or eliminate penalties for errors in filings. Similarly, do you need to prepare accurate insurance schedules? By not properly tracking your assets, you could easily insure assets that are no longer in service, or either overinsure or underinsure those that are. And in the event of a casualty loss, current and supportable information will provide needed support for a prompt and fair claim settlement, giving you the needed cash to recover from the loss. The functions that we've gone over so far are all contained in the B1FAM Fixed Assets module and can be licensed at 3 different levels: basic, standard, and advanced, so that you can scale the solution to meet your specific needs and budget. The remaining functions, which we're about to go over, are optional modules which can be licensed separately but require the advanced FAM module. The first optional module is asset maintenance. I won't go into all of the reasons why tracking and managing asset maintenance and related costs is vital. Do you have maintenance contracts, including warranties on new assets? Knowing the services contracted, knowing the dates and terms of coverage, being notified when contracts are about to expire, knowing the value received from a contract when negotiating the terms and costs of the contract during a renewal, and knowing which assets are or are not covered. All of these things are vital. Also, do any of your assets need scheduled maintenance? Proper scheduled maintenance provides longer asset life, reduced downtime due to breakdowns, and more efficient performance. Is any scheduled maintenance part of a maintenance contract? When there is a need for a service for an asset, is that process properly integrated with the AP function from purchase order through invoice? And if the asset is leased or rented, do any of the maintenance expenses get charged to the customer? Finally, knowing when to repair or replace an asset is equally important and requires accurate information. Being able to track maintenance costs to the specific asset will enable you to make key decisions that will save money and improve operations. The second optional module is asset leases, where you're the lessee. Does your company lease assets from financial institutions or vendors? If so, tracking the terms of the contract, making and properly recording the payments, providing proof of insurance, and adhering to maintenance provisions are all important functions for your business. Capital lease accounting is tricky, and a full-featured lease management function, which is fully integrated with the fixed assets module, ensures that this important business function is properly addressed. The third optional module is lease rental. Do you rent or lease assets to your customers? Do you charge them for maintenance expenses that you take care of? Do you require proof of insurance from them? You need to be able to manage the contracts, generate accurate and timely AR invoices, know when a contract is about to expire so that arrangements can be made, and manage temporary replacements if there's a breakdown. If you do any of this, then you know how important a lease rental application is to your business, and I would be surprised if you do not already have a solution for this function. But how much more effective would it be if it was fully integrated with the fixed assets capabilities? If the asset leased under an operating lease or is rented, then it is still on your books being depreciated. And if it is a capital lease, it is more likely to come back to you at the lease termination, requiring more interesting accounting entries. You will still need to know everything you can about the history of that asset. Given this blueprint of fixed assets accounting and fixed assets management functions, I hope you share with us the appreciation of the value of a full function, fully integrated and scalable software solution. If benefits provided by the fixed asset solution were the only benefits, it would be a great value. But if you can add all of that to the full integration with an underlying ERP application, accounts payable, accounts receivable, inventory, and general ledger, then the power is exponentially increased. And if that underlying ERP application is the award-winning SAP Business One application, the benefits are greater still. That is what B1 FAM has to offer to your business. How many ways will this solution benefit your company? If you want more information and desire to work with us, please visit our website at www.b1fixedassets.com. This concludes this video. I sincerely thank you for watching.